Live from Bloomberg's World Headquarters in New York, I'm Shanali Basak.
And I'm Tim Tenev. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
And Bitcoin taking a dip lower as we hit noon in New York City. It's been falling below 95,000.
And Meta's former head of payments, David Marcus, joins us to talk about his firm, Lightspark, and the internet's financial infrastructure.
Then Gracy Chen of Bitget talks about how crypto adoption is driving her business.
That's all ahead on Bloomberg Crypto. First, though, a check of what's going on with Bitcoin. It's actually been in a really tight range since the election, staying between $91,000 and $109,000. You can see over the last 7 days, though, down about 1.8%. This range is really rare for such a volatile asset. 2-week realized volatility is at its lowest in years. This is according to data from Glassnode, Shanali.
And you're looking at the prices, I'm looking at the flows. These are daily flows for Bitcoin ETFs since November. And of course, enthusiasm, as you see, has waned since Donald Trump's election victory back in November. Now, the White House narrative so far this year has centered on trade and immigration, with little progress on initiatives like a strategic Bitcoin reserve. But hedge funds were big buyers of IBIT in particular during the final quarter of 2024. Brevin Howard, Sculptor, D.E. Shaw all reportedly adding to their position. According to 13F filings, there has been a big hope and want, Tim, of investors, big investors, hedge fund investors, and potentially institutional investors to get back into these Bitcoin ETFs. So that says a lot about the direction of travel, particularly as more investors await new filings not related to Bitcoin, but other crypto assets.
Okay, if we take a step back, Shanali, and I'm curious about your take on this, because this is something that you watch really closely. We talk about sort of like what's the next catalyst when it comes to crypto? What's the next catalyst when it comes to Bitcoin specifically, given all the excitement that we had in the time running up to the election and then from the election to now? As I mentioned, Bitcoin has been relatively range bound. You got to ask yourself the question, what was priced in versus, what the next catalyst is?
Yeah, and frankly, a lot of the catalyst has to come down to who's buying and how much they are going to be buying. One thing that a lot of people have been looking forward to is more institutional investors, as we've been talking about, but also RIAs, more retail investors being told by their financial advisors to put them in their financial accounts, in their retirement accounts, maybe even someday. We spoke to Robinhood CEO Vlad Tenev last week about the opportunity his company is seeing with digital asset adoption. Take a listen to what he had to say.
We're huge believers in prediction markets. We think they're the future of trading and also the future of news and information. So I've been a student and a fan for a long time, and that's one of the reasons we're so excited about bringing a larger comprehensive event contracts offering to our customers. You probably remember in November of last year, we launched the presidential election market, which allowed our customers to trade the election. That was our first event contracts offering, incredibly successful, over 500 million contracts traded in just about a week. We did follow that up with the Super Bowl last week. And the CFTC had issue with that rollout. They asked us to suspend the rollout, which we complied with, even though it was a little bit perplexing to us that several companies were allowed to continue offering those to consumers. So we're going to have to continue to work through that. And we believe in these products. They're coming, and Robinhood is going to be a big part of offering those and also driving regulatory clarity to make sure that these products that are so useful and available to institutional consumers make their way to retail as well. So TBD. But I think you should expect us to be a leader in this innovative space and continue to push for clarity from regulators there.
Well, Vlad, just to sate my own curiosity, it was live for about a day. Did it actually generate any meaningful business, or was it too fresh?
We pulled it back after it was rolled out to a small percentage of customers. We did get some early signs on whether customers would be interested in it, and particularly how they would feel about it being alongside other tradable assets like futures, options, equities, and crypto, because now Robinhood's a comprehensive, diversified platform. So the signals were good. Obviously, customers are interested in these products, And that makes us very, very optimistic for delivering a comprehensive events offering later this year.
Well, now you have a new CFTC, or at least that CFTC is no longer the one you're going to be dealing with. In that light, Vlad, I'm sure that you attempt to be the best business that you can, regardless of the environment. But different environments offer different opportunities. So, what do you see as your advantages now in Trump's new sort of golden era, golden age that he wants to drive?
Yeah, I mean, I think a lot of people focus on crypto, and we're certainly going to be in a more innovation-friendly environment in crypto. I think that's going to be a tailwind for our business as one of the few scaled players in both crypto and traditional financial assets.
Robinhood is also planning to launch crypto trading in Singapore at some point this year. And Robinhood in December announced plans to launch its wider trading businesses in Asia in 2025, tapping Singapore as its home base. Beyond that, in the United States, one thing he talked to me a lot about is the idea of tokenization. We're going to be talking to him on this program in a couple of weeks about this. It will require regulatory approval, but whether you're Robinhood or Larry Fink at BlackRock, you're thinking about how to tokenize assets. For the sake of Robinhood, that means the likes of potentially privately held stock. He mentioned the likes of OpenAI and SpaceX in particular. Can crypto solve this problem of companies not going public?
But is that, a lot of people argue that's a problem, but because venture capitalists certainly want an exit there. But there's a reason that only accredited investors can get access to stuff like this, because it is risky. There's not a lot of liquidity.
More risky than Bitcoin?
Hey, that's not for me to say. That's not for me to say.
Well, coming up next, we're going to talk more about risk. We're going to talk to Gracy Chen, who's talking about the tailwind that her exchange is going to be anticipating here from crypto adoption around the world.
And to access all the latest data and news on crypto, check out CIYP Go on the terminal. This is Bloomberg.
Narrative that we're watching is how blockchain could change how we pay for things on the internet. Blockchain platform Lightspark is using the Lightning Network to bring a more efficient payment pipeline to the internet. Here to explain, Lightspark co-founder and CEO David Marcus, who formerly led all things crypto and payments at Meta. You may remember deeply all of the things he had been working on, but let's talk about what you're working on now, David, because if you think about the Lightning Network and the potential to really amp up payments, what are the types of volumes that you're seeing today, and what are the types of volumes you think you'll see a year from now?
So first of all, thanks for having me on the show, and just to dive a little bit into what are the issues of current payment systems, and just to state the problem sets that we're going after. So today, if you look at the global payments landscape, domestic payments have, for the most part, been solved. You have real-time payment systems all over the world domestically. But then when it comes to moving money between domestic real-time payment systems across currencies, banking systems, account format types, difference, then you rely on correspondent banking and SWIFT that moves $5 trillion a day, 50 plus years after it was invented, which takes, on average 2 to 3 days to clear. It doesn't work Friday after 5 p.m. or on weekends or on bank holidays. That's why we call them that, by the way. And that's kind of a sad state of things for 2025. And what we believe is the world needs an open money grid that enables money to move freely on the internet, the same way that any other content type moves on the internet. We happen to believe that Bitcoin is the only thing that's actually neutral enough and decentralized enough and unassailable enough to be that open money grid to interoperate all of the domestic payment systems, all of the currencies and the stable coins and assets. And so that's what we're building at Lightspark, is we're making Bitcoin fast and cheap and interoperable with all of the currencies and payment systems in the world. And we're enabling banks and wallets and neobanks to connect onto the network and move money in real time cross-border, at a very, very low cost, 24/7.
Yeah, David, as Shanali mentioned, you formerly led all crypto and payments over at Meta. You also headed up Messenger there for years. A lot has changed since you left Meta in terms of the regulatory environment. And I'm wondering if you could see Meta reviving its stablecoin given what's happened in Washington, D.C. and the changing conversation around crypto and the blockchain?
Well, I think that if Libra was attempting to launch right now, it would probably go through. Clearly, the political landscape has completely changed from trying to actively kill every actor, participant, or business in crypto to embracing it fully, which is like a massive polarity shift for all of us building in this industry for a while. That said, I think that the problem with the original design of Libra, and this is what the learnings we're applying to Lightspark right now, is that the stablecoin itself was centralized in the sense that we had the Libra Association with 28 companies managing the stablecoin and the reserve, but that was a centralized entity, even though the governance was decentralized to the max possible at the time, at least with what we had. And so a stablecoin, you have to have an entity that actually manages the reserve. As such, it's a super centralized thing. And if the entire payment network depends on one stablecoin, then it's very fragile. And it doesn't look like the internet. And we believe that stablecoins are actually super useful as a method of money transmission when you're sending and receiving the same currency. But we believe that the network needs to be maximally neutral and decentralized. And that's why we believe Bitcoin is the only network that has the necessary neutrality to accept all types of payments and move money in a completely neutral way.
To that end, while there has been a broader acceptance of Bitcoin, in a lot of ways you see it through the ETFs, for example, there's a lot of concern about the different tokens that are being built outside of Bitcoin and what that could mean, particularly in the light of potential lighter regulation. Now, you have been fairly outspoken. You had written a very long post about this kind of broader concern about debanking in the country. While that is very understandable, on the other hand, are you concerned at all that this could go too far when you see a lot of agencies that have been particularly targeted at financial regulation potentially either going away, slimmed down, or being absorbed into other agencies?
Well, look, I think everything needs to find its balance. So we were so far out against anything that could actually disrupt the control over the financial system that the government had, that it killed a lot of really promising companies and technologies that promised to actually rewire our financial system. That said, I think that we ought to ensure that consumers and investors are protected. But I think that one of the topics that we should talk about right now is this whole notion of an accredited investor that actually allows only the rich people to get richer and prevents people from accessing financial products in general. And I think that's a real topic because that's the appeal of crypto for many people. They've been sidelined by traditional financial services and financial products, and restricted access to a lot of products, and suddenly you have crypto that allows them to actually buy into all kinds of speculative assets. And so I think we need to find the right balance. And for now, I feel really good about the pendulum swing in the other direction, but for sure we need to be cautious and ensure that investors and consumers are protected adequately.
Well, how do they get protected? Because if we were speaking 2 years ago at this time, we'd be talking about folks who were caught up in FTX and lost a lot. And look, a lot has happened since then, but there were a lot of concerns around that time. And that's when, advocates of regulation pointed and said, hey, this is why we need regulation in this space, because it can all kind of go up in smoke very quickly.
Well, I don't think that was that the FTX blow up was definitely an accelerant to something that was already happening. But I think there was a lot of political motivation into what went into this antagonistic point of view of the government and the regulators to crypto, more than the goodness of their hearts to protect investors, frankly. But I do feel that having appropriate disclosures, ensuring that investors know what they're buying, are all important things that I think our current financial system does quite well. And I feel that as far as that is concerned, I'm fully aligned with doing what it takes to ensure that consumers and investors understand what they're getting into when they're buying a financial product.
David, do you think that traditional financial companies understand just how big the opportunity is here? For example, you heard Robinhood just a week ago speaking about how they were really using stable coins to manage the phenomenon really of 24/7 trading, that it was a better mousetrap for them at the end of the day. Are there places that you could see the stablecoin industry taking over in a large way what the traditional financial system does today?
Well, look, I think that, the internet, I often use telecom and the internet as a good analogy. The telecom was not necessarily real time, didn't really reach the edges. Everyone had to pay $1 for an international call or 25 cents per text message. And suddenly the internet happened and everything became free and accessible and developers could build on it and it became 24/7. And I think the same will happen to our entire financial system, not only payments, but also trading and liquidity movement around the world. And that's going to make our markets more efficient. But it is also going to mean that a lot of new companies and services are going to need to be built to respond to the 24/7 nature of a system that previously really wasn't 24/7, was batch processed and closed down over the weekends. And I think stablecoins are one of those tools that will enable that network to become 24/7, but there's a lot more that's needed.
Lightspark CEO David Marcus joining us from Los Angeles. David, good to see you. Thanks so much for taking the time and joining us on Bloomberg Crypto. Well, coming up, Gracy Chen is here. She talks about the tailwind her exchange is anticipating from crypto adoption around the world. This is Bloomberg. Bitcoin struggling at the moment, hitting the low of the day below $95,000 per Bitcoin. Let's discuss what's happening with Bitget CEO Gracy Chen. Gracy, Shonali and I were chatting about the next catalyst, given the excitement that we saw up until the election and through the inauguration of President Trump. What's the next catalyst for Bitcoin?
Next catalyst. Next catalyst could be anything that Donald Trump himself and the new administration promised, and when can we see those promises become reality? One of the big topics here is probably the Bitcoin strategic reserve. Concerning strategic reserve, I've chatted with some of the current crypto advisors that the U.S. government has, and David Sachs himself. I haven't met David Sachs, by the way, but some of their crypto advisors think right now nothing is that concrete, and they are like stuck in the middle of whether and how to put Bitcoin in the strategic reserve. If we add Bitcoin, should we add some other major cryptocurrencies such as Ethereum, XRP, and Solana?
One question I have about this, Gracy, is that if you go back a year from today, you were looking at a whole range of catalysts, from the halvening to also potentially regulatory change under a new administration. You were looking at the advent of spot Bitcoin ETFs that could drive major flows. Now, we've seen those flows. Those flows are now starting to wane. So will anything the administration does be as big of a catalyst as we saw a year ago?
I would argue that halving probably is not a catalyst in 2024, because halving is priced in already. It's a very expected time, and it's quite specific in the middle of 2024. And even if you look at the historical price of Bitcoin before or after halving, there isn't a big change. All the changes come from unexpected events, but halving is a very expected event. However, back to your question, in 2025, I think it's not just strategic reserve or the institutional inflow from either ETF or some other major stocks such as MicroStrategy coming from. Another thing that I guess the whole industry is expecting or is looking for is that when does the US start to cut more interest? And when do we have more loosening fiscal and monetary policy? I guess that's still macroeconomics is going to be the biggest catalyst.
Gracy, you mentioned you've at least spoken to some members of the Crypto Advisory Council. I want to make sure that's what you said.
Yes.
Okay. Are you pleased with where they are right now, with the progress that's been made, just shy of the first month that the president's been in office?
Okay. Am I pleased? I wouldn't say I have that high expectation in terms of within a month they can achieve everything. It's impossible. The new administration just, the inauguration was within about a month time, and he still has four more years to go. So I personally didn't expect the Bitcoin strategic reserve to be concrete in the first half of 25, probably even not the whole year of 25. But I'm seeing them making progress. Whether I'm very pleased about the progress, and if I actually don't have the full picture or full information about what they have done and what they are planning to do. But I think they're trying to do something, and it's making progress, which I'm pleased.
I think
another thing
right, Gracy, just really quickly here to double down on that, the not having the full picture being an issue. We're getting a question from a viewer here. Are we relying only on politicians to deliver promises to hope that Bitcoin will go up, to hope things go up, because the track record isn't good? And that's been true across administrations, hasn't it?
Yeah, that's actually something I wanted to bring up, which is Doge. Doge is largely driven by Elon Musk. He's not a politician. He's more of a business person. I would personally think Donald Trump is more of a business person than a politician. He's probably both. But as a business runner, I do believe that business people, entrepreneurs like Elon Musk and even Donald Trump, they are driving much more changes than pure politician. Nothing against politician, and I'm never a very political person. My point here is, I think, for example, if we look at Doge and how Doge, had a whole list of things that they think the government is having redundant departments and spending wasted money here and there. Something like Sri Lanka climate change, something like that. For me, it's quite ridiculous that they found out like only now. So back to your question, I think it's okay. Like, I'm not fully relying on politicians to make changes, because we do see changing forces from other areas and other aspects of the world.
Well, there you have it. Bitget CEO Gracy Chen joining us. That is going to do it for Bloomberg Crypto. Thank you so much for tuning in. Join us again next week. This is Bloomberg.